All right. Hello, everyone. Welcome to another episode of Trading Bitcoin with your host, Tone Vays. Hope everything is good. No audio issues, no video issues today. And we're going to jump right into the markets. The markets are open. It is just past 11 a.m. Eastern time for the U.S. stock market. It's actually a great time to take a look at the markets. Bitcoin has not been very exciting as of late, and that's because, like I've been saying, it remains fully correlated with the stock market. It never stopped. The only thing that is different when it comes to Bitcoin versus the stock market is, of course, the amplitude of the correlation. All right, let me go straight to screen share. And we go from there. All right. Oh, I forgot to update the bunker days. I haven't updated the graphic in the back in a little while. It's actually a few days past that. So, all right, let's just jump into it. Hey, guys, if you want to support, please check out the affiliate page. I decided to reteach the on-demand workshops this summer in July. So what I'm doing is I will teach intro trading with technical analysis again. It's going to be longer. It's going to be double the time, but it will only be basic TA. There's not going to be anything about sequential or anything like that. It's just intro to TA, and we're going to go more in depth. I will also combine these two webinars, risk position size management and entries, exit, stop losses, into a single video of also about 6 hours. These are about 3 to 4 hours each. I will do them together because I think they go together as one, and I will teach those in July. So I already put one on the schedule. It's not open to registration yet, but probably this weekend we'll put it up on sale, and it's probably going to be July 11th until it goes on sale. Not sure yet. All right. You can read up on the description, the general description, but there will also be a detailed description for the workshop itself, which I haven't yet written up, which is why. Actually, what happens if you click on that? I'm curious. Right. So that's missing. Okay. So that's what I need to do. All right. So once I get that up and running, we will, once I do that, this thing will be up on sale. Okay. So if you've already taken it, I mean, you don't really need it. But hey, if you want to take it again, it's going to be 0.05 like the other ones. All right, let's go to the markets. No more announcements. I'm going straight to the S&P 500 because that's actually the only one that matters. I know everyone wants to know about Bitcoin, but Bitcoin will do what the S&P 500 does. How long is that relationship going to last? May last another week, may last another decade. Honestly, no one knows. But I watch these markets. I don't watch them all day, every day, but I certainly watch them all day and several times a day. And I don't have to know what Bitcoin is doing if I know what the S&P 500 is doing. And I don't have to know what the S&P 500 is doing if I know what Bitcoin is doing. But I also know where the money is. The money is in the stock market, not in Bitcoin. So so the stock market drives the price of Bitcoin. It really is that simple. Lots of people like to overcomplicate shit. Sometimes it's very simple. It's not easy to trade, but the overall concepts are pretty simple. So what's going on with the S&P 500? From a TA perspective, this is a ridiculous gap right here. Now, this was also a ridiculous gap last week, but I think this gap here is more noteworthy from a fundamental perspective. I don't understand how the S&P 500 is this high, and you've never heard me say that. Like, I'm not the boy who cried wolf. I was making fun of the gloom and doomers for the last decade as the market kept going higher and higher and higher. So when I say I don't understand that the market is this high, it's not like I've been saying it for 10 years and been wrong for 10 years. So I've only been saying that recently. I've only been saying that since late May, very late May, early June. Only since early June have I been saying, I don't understand how the market is this expensive. And I think it's going to go, I still think it's going to go down. However, and this is also why I have my short trades up. I'm going to go to the futures market now, and we're going to look at a one-day chart because it's just a smoother chart because it trades 24/7, well, 24/5. So look, so here's the deal. A lot of people don't like the fact that I don't show you my trading account and I don't call you personally every time I make a trade. That's your problem. That's not my problem. Here's where I entered a short trade. I don't care if you believe me or not. It's really irrelevant to me. If you don't like it, watch somebody else's YouTube channel. I shorted the market off this 9. I don't remember the exact price because I'm trading. This is the futures of the S&P. I am trading options on SPY. So there's absolutely I have no idea what price it was at. But the point is, I shorted somewhere on this 9 candle. I don't even remember if I shorted on the 8 candle, but I definitely didn't short on this day because I was already in the short. So somewhere on this 9 candle, I shorted. So I will do the worst benefit of the doubt. I will say I shorted on the last tick of this candle number 8, which means I shorted almost at the bottom of the candle of this number 9. Now, that position was looking awesome right here, but I didn't take any profit because I thought it was going to go lower. And also, I didn't expect that kind of a rebound. This entire day, Monday, I really thought the market was going to turn and go back down, and it never did. And it created a massive candle. Yesterday, I was ready to cut my losses. And I even said in my chat groups, I will take the stop loss at 31.50. So for stop losses, I usually use blue lines. So let me put a blue line in here. My stop loss is at approximately 31.50, which is probably like here. And we're going to talk about why I'm still in the position and I'm not in this, and it hasn't been taken out yet. So I'm going to put it exactly. So I don't like round numbers, and this is the kind of stuff that I teach in like entries, exits, and stop losses and stuff. So I'm going to put it 31.55.50. That sounds perfect to me. 31.55.50 is good. Why am I still in this trade? The reason why I'm still in this trade is because this price has not yet been hit during actual trading hours. So now if I go to the actual tradable S&P and we look at the top of this candle, the top of this candle is 31.53. So it never actually hit 55. And the thing is, it happened like in the first 5 minutes of market open. And those of you that have attended my workshops, you know that I don't take any action in the first 30 minutes of trading. More like the first 20 minutes of trading. For 100%, I never take any action in the first 15 minutes of trading. So that high was reached in the very beginning of that day. So I was not going to act irrationally and FOMO in or FOMO out. So my stop loss is very close to getting hit, but it has not yet been hit. That is where my stop loss is. My stop loss is at this blue line, but during open trading hours, not futures after market hours. And this is the daily chart. If I go to the 10-minute chart, here's where we are. We bounce right on this 9 candle. I actually texted in one of my groups, hey, keep an eye on this 9 candle. I did it right as the candle was forming and the price of stocks was down here. But I said, I'm still short. I'm not going to do anything with my position. Some people did take the long trade here as a day trade, but I'm in a longer term short position. So it's actually at 99, right at support. So I'm still sticking with my short trade. Look where my stop loss is. Now I can actually lower this stop loss at this point. Now that I'm looking at a 10-minute chart. Looking at a 10-minute chart, I can lower it to this swing high. But it's almost the same thing, so I don't really care, okay? That is my stop loss. This stop loss will not be moved, but it has to be executed not in the first 15 minutes of live market action. In the last 5 minutes of live market action, that's fine. So if the price of the S&P is above 31.55.50 at any time between 10 a.m. Eastern, you know what? I'm going to stretch that a little bit because I like my 10 a.m. reversals. So maybe between 10:30 Eastern and 4 p.m. Eastern on any weekday, I'm exiting my short. Now, what if I am to exit this short? I am exiting a very disappointing short, but I will exit it at a slight profit. However, because I did not buy enough time on my options, if we hit this blue line, let's say next week, maybe not next week. If we hit this blue line next week, I will probably be out of the trade break even and not make any money. But if we hit this blue line the week after, I will probably be out of the trade with a loss because options have something called time decay. And it's really disappointing that I haven't, like these swing trades haven't made me on the S&P, haven't made me that much money. But that's okay because that's my style of trading. And my style of trading has made me enough money in the past that I can go months without making money and then cash in big. Now, you have to have your own style of trading, okay? There's also 100 different stocks out there that you could trade in a different way. But this is what I'm doing with the S&P 500 just for the hell of it. Basically, I don't want to be actively trading. I want to be working on other stuff. But I couldn't pass up this opportunity to short this 9, which turned out to be a losing trade, and this 9, which in hindsight, which is always 2020, I had a really nice profit here. This was not a small position. I was very confident that this was going to tank down to like 2,700. So I had a pretty substantial position. I still do. And a huge profit here. And disappointing that it went up over the last few days. But I'm staying with my trade. Until we hit my stop loss, I'm going to stay confident that the market will turn later this week and into next week. Now, everything else follows what the S&P does. I don't care if you like it, but that's what it is. Now, oil probably topped right here. But remember, if the S&P goes to new highs, so will oil. Everything is correlated. Everything is correlated. By the way, speaking of, if the S&P 500, if it breaks yesterday's high, I exit my short trade. If it breaks the prior swing high, I'm probably going to be a bull of the S&P 500 for the next 4 years. At this point, I give up on the bearish narrative that the S&P 500 is going down. If the S&P goes above 3250, if the S&P breaks the June high, I will then be in a position where fundamentals don't matter and the only thing that matters is the Fed. I am still the crazy tinfoil hat guy that believes that the stock market fundamentals matter as opposed to only the Federal Reserve. But if we break 3250, I will no longer care about the stock market's fundamentals, and it's only going to be about the Fed. And if the Fed wants to buy ETFs, or it wants to buy Tesla, or it wants to buy Amazon, or it wants to buy fake Zoom, if the SEC lets it trade again, then that's what it is. That's the market, and that's how you make money in that market. Why isn't gold and Bitcoin correlated? Of course they're correlated. Have they not been correlated to you? Just put the chart side by side. We can look at gold. Here's what gold has done since, let's just go to the beginning of April. We hit a high in the middle of April. We swung into that high throughout April. Gold bottomed on March 19th. It had a huge rally all the way into mid-April, and it consolidated since then. This is the daily chart of gold. Now let's go to the daily chart of Bitcoin. Oh, sorry, that was the weekly. That was the daily. Sorry. So let's look at Bitcoin. Here's Bitcoin. Bitcoin bottomed in the middle of March. It made its high a few weeks later. It made its high early May as opposed to mid-April, and it has consolidated since then. So I don't understand why there's a statement saying gold and Bitcoin aren't correlated. They're very correlated. They look identical. The only difference between gold and Bitcoin is that Bitcoin topped on this around here and gold topped a few weeks earlier. Other than that, I don't see any difference. And that's just the recent picture, right? If we go to the weekly gold, gold has been on a really good run since August of 2018, and it had a very nice top last summer around August and pulled back. Now let's look at Bitcoin on a weekly chart. Let's look at it since August 2018. Oh yeah, Bitcoin was still in its hyperwave bear market phase. Okay, so it wasn't the correlated as far back as 2018, but in 2019, just like gold, Bitcoin went up and topped in the summer of 2019. It wasn't correlated back in 2018, but if we compare 2019's, where's gold? Here's 2019. Here's all of 2019. Gold pretty much went up. It consolidated the first half of 2019, and then it rallied into the end of the summer. Bitcoin rallied a little bit earlier, and then they both pulled back. It's not a great correlation. It's been more correlated lately, but you can just look at them side by side. They do act similarly. But the current situation in the stock market has me just flashbacking to what Bitcoin did in June. So here's the stock market, and the stock market went up from insane lows to unreasonable highs without breaking the prior swing high, and like dumbfounded. I was dumbfounded right here at the top. How is it going so high? The fundamentals don't support this. And then we had a big fall last week, and now we're making a lower swing high, at least in my opinion. If we look at Bitcoin and we go to the daily chart, let's go to the weekly chart actually, and we look at last summer, this is where I think the S&P is. Bitcoin, I didn't mean to move that. So Bitcoin went up to its unreasonable highs in June, and I didn't understand why, because fundamentals did not support it whatsoever. Hindsight is always 2020, and we know this to be a Ponzi scheme out of China. But in any case, and then Bitcoin fell, and then it made the secondary high without breaking the high. I had no choice but to start becoming a bull. If we were going to be, I was starting to turn bullish right here at the top, but I instantly became a bear again. So my days of being bullish, these are weekly candles. So I think I was bullish for maybe a week up here, and maybe a few days I was bullish here, and then I became a bear again. So people that don't know how to trade think I turned bullish for the long term here and here. I had no choice. I will never, ever, ever stand on the sidelines screaming, we need to fall as a market breaking into new all-time highs. That will never happen. I don't care how, I don't care if it's horse manure. If the value of horse manure is breaking all-time high, I will be a bull on the price of horse manure. Okay? I'm always a bull of any asset as it breaks all-time high. It doesn't matter if it's fake Zoom or not. It doesn't matter, because I understand the irrationality of 12-year-olds trading on Robinhood. Whenever something is breaking to new all-time high, that's what's going to happen. So, and therefore, it was very frustrating for me to have to turn bullish here because I knew the fundamentals didn't call for it, but technicals were starting to turn bullish. But the market did turn and fundamentals played its role. Now, we continue to not be able to break prior swing highs. But I want to talk about this area here. This is where the market goes irrationally high from a low without breaking prior swing high, falls quickly, makes a slightly lower low versus a few days or a few weeks earlier. And now, the moment it breaks the prior swing low, shit literally hits the fan. This is where I think the S&P 500 stands. Here we are. We made an unreasonable swing high, and we now pulled back. We had a reactionary lower high. And from this point, I believe if the S&P breaks these prior swing lows of 3,000, shit is literally going to hit the fan. And we can be down at 2,700 in a hurry. If the market makes it to 2,750 area, it will then have a sufficient enough secondary low for me to consider being a stock market bull into Trump's reelection. This was the reason why I became a bull of Bitcoin here without the need to break the prior swing low. And why I'm about to win the bet against my friends like Socrates and Joe Sass, that the market will not go below 3,800 again. That was a very easy bet. I didn't think about that twice. I think it ends this summer or something. But either way, I don't think we're going past 3,800. Now, Bitcoin does act a little bit differently. Bitcoin had its major secondary drop from the big drop. Now, this drop happened to coincide with the first fear of COVID. The S&P 500 never had the big drop like Bitcoin did in a bear market. So the S&P 500's big drop was the COVID drop. So the second drop will probably not go lower than the first drop. The Federal Reserve has been making sure that the current pullback, which started last week, does not go below the prior fall. But where is the bottom? We don't know. Is it possible that the secondary low is in right here? The answer is yes, of course it's possible, but it's still, to me, unlikely. I still believe that we are going lower than this swing low. I believe we are going to go lower on the close, and I believe we are going to go lower on the intraday swing. Right now, the intraday swing is at around 29.65 in the cash market, lower in the futures, and the lowest close is at exactly 3,000. Okay, so as the S&P goes, so will other assets. As the if the S&P goes lower than the slow, expect oil to take a big hit, expect Bitcoin to take a big hit, but probably not gold. This is where I think gold will separate a little bit. I think that Bitcoin is too speculative of an asset at this point in time, while gold is about to start acting more like a safe haven at this point in time. Not only will gold act as a safe haven, commodities as a whole might act as a speculative safe haven because people need to put their money somewhere. And I believe they will put them into commodities. Gold, oil, not oil though. Oil does have a fundamental basis of the economy. If the economy is crashing, no one's going to be using oil. Japan has been doing QE for 24 years. Yes, correct. But if we look at the Japanese stock market, let's go to the Nikkei. And we're going to zoom out. We're going to go to a monthly chart. So here's the monthly chart. The Japanese market topped in 1989, I believe. Yes. The Japanese market topped in 1989 and it bottomed. Well, it kind of bottomed in 2003, but look, the Japanese stock market, this is not a great pattern. The Japanese stock market, of course, rallied. Everything rallied in .coms. Everything crashed in .coms. Everything rallied in the real estate boom. Everything crashed in the real estate boom. But the Japanese market stayed and made this consistent low. And the Japanese market is, like it'll probably reach a new all-time high eventually. But I think the Japanese market is not going to go lower than this area. The Japanese market is holding its 2007 highs as well. So yeah, they've been printing forever and they can't print fast enough, so they can't reach a new all-time high. Which, by the way, happened on a monthly double nine. Wow, look at that. Let me zoom in on that. Yeah, there it is. The monthly double nine. Beautiful. This is why I like the double nines. We just had that in the S&P daily, by the way. There it is. It was a quasi because it fell too much in the beginning as the month began, but that's certainly enough for you to get out. Look, if I was live trading this monthly chart right here, this tells me that it probably topped. And then just like what happened to me in the S&P, this green 2 above a green 1 above a 9 gets me out of the short trade and potentially into the long trade. And then I do it all over again on the next one. And this one panned out. Did you mention you'll be redoing your videos? Yes, I did in the very beginning. So right here, it's not open to registration yet. I still got to write up a description for this particular workshop. This is a general description for all my workshops and webinars. And the registration form is here. But I do want to write up a description for this particular workshop, and I'm going to add another one. So these are webinars. They're going to take place in July. I really want to redo these on-demand videos. I think it's time for an update. So I'll be redoing them. And if you want to support, please check out the affiliate page. All right. So let's go back to the markets. Gold. I haven't looked at gold yet. This is the weekly gold. Let's go to the daily gold. Gold is consolidating at the top. And to me, that's bullish. I don't know when it's going to break out. It can take a month. It can take a year. I have no idea. But consolidation at the top is bullish to me. And I remain long in my gold position, waiting for a breakout to new all-time highs. Like I said, no matter how big of a bear I was in gold when I started this YouTube channel, it doesn't matter. I will change my mind. As a trader, if you don't change my mind with every single tick of every single day, with every second, you will not last long as a trader. Every single, this is what? Let's go to the 10-minute chart of the S&P 500. Every single tick, every single penny change in this candle of the 10-minute chart of the S&P 500 potentially changes my view of the stock market for the next 10 years. And I'm saying potentially because it all starts with every single tick. At the moment, I am sticking with the bearish trend, but every single tick can change my mind. And it can change my mind back and forth, flip-flopping every 10 minutes. That's possible. It is unlikely. But as a trader, if you are not flexible to understand and realize the potential differences. Now, for a bad trader, they're actually acting on those things. Well, right now I'm long, and in 10 minutes I'm going to be short, and in 10 minutes I'm going to be long. You'll realize real quick you're not going to have a trading career. But as far as your views on where the market's going, if you're not flexible and you're not able to change your mind with every new forward-ticking second that gives you more information, fundamental or technical. And there's not much fundamental analysis you could be doing as a retail trader. You just don't have the resources. So it's mostly technical. But right now, here's what I'm looking at. If at some point today, the market goes below the prior morning swing low, I expect it to accelerate to the downside. So right here, here's an example. Here's what happens when a market breaches the prior swing low. And if this happens again, that's what I am to expect right here. If we breach this swing low at some point today, and we have 4.5 more hours to do this, if this is breached, I expect an acceleration further down. I'm going to put this here. And I'm going to draw an arrow. Now, people will ask, well, how much further down? And the answer is, I don't know how much further down, but I will answer it this way. Further down enough for you not to lose money on a short-term trade. That's what I would do. So for me, with my style of trading, if this is to happen, and this line that doesn't mean anything, right? I'm just going to draw a random arrow. I'm going to draw it to 3,100 round number. Okay. So for me, what would this mean? This would mean that activating a short trade here lets it fall fast enough right away for me to set a break-even stop loss. Now, will this break-even stop loss pan out? Well, I don't know, right? Because if I had entered the short trade right here where this red line happens to be, and it fell quickly, and I set my stop loss right at the red line, notice how I got stopped out of my trade. I made no money, and now I'm upset that I could have made a lot of money here. But at the same time, do you see this green arrow? Should have told you something. So if you are if I was to take a short trade right here, I would have considered lowering my stop loss significantly in order to make sure that I walk away with this with some profit. At least I would have sold half my position. But that's short-term trading. I'm not in a short-term trade. I'm in a swing trade. And for a swing trade, my rules are exactly the same. Why is this taking forever to load? I shorted right here off a 9, off a double 9. And my initial stop loss, well, there was a 9 in the futures market. I shorted right here off a 9 in the futures market with options of the cash market. My initial stop loss was above the 6 candle, a new swing high. My new stop loss is above yesterday's swing high, right at the swing high. So I'm close to my stop loss. And if it hits it, it hits it. That's trading. Bitcoin. There's nothing to really say, guys. Bitcoin is consolidating in a triangle. It's holding the 50-period moving average. It has flipped the lucid SARS because the stock market crashed the other day, but then recovered. And right now, Bitcoin is a total mixed bag. So I don't have any short-term position in Bitcoin, just my long-term hodl position, where I am still hopeful and leaning bullish with this symmetric triangle on a daily time frame, while at the same time looking at a more significant pullback from this rejection that I've been talking about for over a month, going on 2 months now, probably since late April, and we're already going into late June, where I've been saying, hey, this trend line rejection and this 9 will pull back the market, and they are. How deep can this market pull back? If the S&P 500 crashes, I can see the Bitcoin falling as low as 7,000 and then coming back to the trend line and breaking out not only through the trend line, but also with the head and shoulders, the inverse head and shoulders. But I don't expect that to happen till like September, which will probably allow me to win my other bet that Bitcoin will not close above 10,000 90 days this year. Okay. That's pretty much it for me. Are there any good questions? I don't know if I have anyone doing questions for me today, so I can go and look at your live chat real quick. When you dollar cost average, do you average up or down on your positions? The whole point of dollar cost average is to not care whether you're averaging up or down. That's the point of dollar cost average. I always prefer in buying on the way up, not on the way down. If Bitcoin is dependent on the stock market, wouldn't we see the same triangle on both here? No, no, because like I've been saying, they're correlated in direction. They're not correlated in amplitude or consolidation. Bitcoin's been consolidating. The S&P kept rising. So they just move in like stages, but they're pretty correlated on a bigger picture. Bearish divergence on Bitcoin daily. Maybe. Bearish divergence. I don't see how a bearish divergence is possible because Bitcoin hasn't made a new swing high. So I don't understand that concept. Maybe you're looking at divergence differently than me. I do want to look at BitMEX funding rate. And it's favoring the bulls slightly. So I don't really see divergence. I mean, I guess you can say this is a higher high, but it's so minorly higher. I guess there is divergence between the high in May and the high in June, but that's been a long time ago. It's not really helpful right now. I will say that if you look at the Nasdaq, and someone pointed that out to me today in one of my chat groups. If we go to the Nasdaq or Nasdaq 100, same thing. And yeah, I do want to take a look at at DXY. So if you look at the Nasdaq, maybe on a weekly chart or a daily chart, I'm not sure. I believe the Nasdaq, if I yeah, I don't want to remove this. So let me make the screen bigger. And let me add. Oh, if I make it bigger, I can't add anything. Okay. Let me add. I'll only look at the RSI. I'm not going to look at the rest, just for simplicity. Oh, added it twice. Okay. How do I take it out? There it is. Ah, shit. I did remove it. Now I removed the other one. Okay. Maybe I can do Control Z and bring it back. There it is. Okay. So if we look at the RSI, you can see massive divergence on a weekly RSI, and I'm sure daily as well, with this current swing high. That is divergence. However, and this is a really big however, we need some downside here. But this, because this can keep going higher and divergence can go away. So we really need a turn here for this divergence to play out. But that is divergence. That is massive, massive divergence. And we did not have bullish divergence between this and this, because the low was not lower than this low with a higher RSI. So this here was a higher low with a lower RSI, but this is divergence. And also right here, huge spike in RSI, and then we kept going higher, and that's divergence. But here's the problem with divergence. See, we also had divergence. See this 9 right here? This 9 also gave you massive divergence, and the market turned. But then it continued higher from mid-June all the way until this 9 here in August. And you can also say that we then consolidated for another month until like the first week of October when it finally crashed. So just because you see divergence doesn't mean that it can't continue to be divergence for another 3 months, because that's what happened here. Like right here, where I would have said, hey, this thing is ready to turn based on divergence. That was June. It actually turned in late September. So right now we're in the middle of June, so same thing. So it's possible for us to go higher and consolidate for like 3 more months and still be very divergent. So just keep that in mind. But yes, there was massive divergence in the Nasdaq. All right, Morgan, thank you so much for your super chat. Let's see what you have to say. Tom, sorry if you covered this already. Just got here. But any thoughts on the Fed buying corporate bonds? Any fear of the escalating to direct stock buys? I am not. I do not expect the Federal Reserve to directly buy stocks. See, here's the crazy part. Everyone looks at the Federal Reserve buying corporate bonds, and they are in shock. What a lot of people don't know is that the Federal Reserve in 1913 was created to buy corporate bonds. That was the purpose of the Federal Reserve. The reason why the Federal Reserve doesn't buy corporate bonds until this year, and it has never bought corporate bonds between 15 and now, is because the federal government actually took over the Federal Reserve. The reason why there's this complete, like, some people are, like myself, are saying that the Federal Reserve is a government entity, and it actually is federal. While there are some people, I remember listening to someone like Gerald Celente or something, or some of the other, again, perpetual gloom and doomers. They're always like, the Federal Reserve is not a government institution, it's a private institution, and these 8 rich people like the Rothschilds are making all the money. That's insane, okay? So initially, the Federal Reserve was created as a private institution. They just called it Federal Reserve. Dumb name. I don't know why they called it the Federal Reserve, but when the Federal Reserve was created, it was a private, bank-funded institution as a lender of last resort to prevent viable companies from collapsing in a financial panic. Its job was to buy corporate bonds and support those companies, and then they would purchase them back, okay? So yes, the job of the Federal Reserve was to somehow be independent and make sure that, the entire financial economy doesn't collapse due to panic. And they would create liquidity in the market by providing liquidity to companies that can prove that they can, survive the financial downturn, come back profitable, and make the Federal Reserve money for keeping them alive in a panic, preventing, a crash. Kind of like, you remember what happened with with the MakerDAI and how a bunch of Ethereum got liquidated because the price of Ethereum crashed for like 1 day, and then Ethereum recovered, and all these people, lost all of their collateral because of one down spike for 1 day. So the Federal Reserve was created to prevent that situation, only in the real economy and not a useless, dumb smart contract. So the fact that the Federal Reserve is buying corporate bonds is going back to the original blueprint of the Federal Reserve. The problem is, for the last 100 years, the Federal Reserve has been buying government bonds, and they're not going to stop doing that anytime soon. That's the problem. The fact that, so now it's buying that as well. So it's all bad. So they completely messed up. But yeah, so am I concerned that the Federal Reserve is going to stop buying equities? No. We are we're not Japan. So the US is a long way away from that part. But I wish the Federal Reserve never bought government bonds to begin with. I wish the Federal Reserve continued on its original plan for the last 100 years, only buying corporate bonds in cases of financial panics, and only for certain areas of the economy, and basically not a direct bailout, but a bailout that would actually, a company is not exactly happy to take. So, for example, if your business is about to collapse, but you think you can salvage that business, you will try to get a loan for that business, but you have to repay that loan. So think about it, right? So why do people go for a loan from the mafia? So, or from like a loan shark, because they really think they could salvage their business, make good money, and repay, the mob boss the money. But if they don't repay the mob boss the money, they end up in a very uncomfortable position with the loan that they took. This is kind of supposed to be what the Federal Reserve was going to do, but it was going to do it independently of the government, and in a way kind of like policed by the banking system itself. And as crazy as it is to say, hopefully without crony capitalism. How is it going to get done? I don't know. Maybe it's better not to have it. But the original vision of the Fed was to do exactly what it's doing now. But unfortunately, the Fed's main job is to support the government, not to support corporations. So adding what they're supposed to be doing for the last 100 years now is not really, probably not a good idea, because that's not its current job. So here we are, the stock market is rebounding once again. But like I said, if we fall below this line at any point today, I expect, an acceleration of the drop. No, they're not going to announce direct stock buys on this downturn. No. That's not how it works, guys. It is not how it works. So this is a very critical time for the economy. The Fed did a lot of crazy shit 10 years ago, 13 years ago now, in the housing crash. And this is the next big panic since 13 years ago when we had that crash. And the Fed is now doing a lot of stupid shit. But as far as the additional stupidity of buying equities directly, that ain't happening on this crash. Ain't happening this crash. At least one more cycle, at least one more generation, at least one more, batch of 18-year-old traders losing money. So ain't happening this crash. Next crash, when Trump is leaving office, and then there's another catastrophe in the markets. So we're looking at 2026, 2027. By the way, if that happens, the Bitcoin's going through the roof. There's no way in hell the Federal Reserve is going to be buying equities, whether it's an ETF form or whatever. So are we in a financial panic right now for the Fed to be buying corporate bonds? Yes, yes. Again, the only people that have not realized that the Fed understands, the Fed fully understands that, I mean, why would the Fed panic so much because of one day? Because they know that this is unsustainable. They know that, you know, you still can't go out and get a legal haircut in half the country, right? I mean, I go get my, like, I got sick of it. Like, I don't care. Well, like, I'm breaking the law like every week when I go and get my beard trimmed, right? Go to a basement, I go see a barber because it's illegal for him to operate a barber shop. Okay. You can go break into stores, no problem there, but you can't have an open business. Somebody can break into his barber shop and they apparently are not breaking the law. They're just exhausting their frustration. But I can't go into the barber shop, pay money, and get a head shave and get my beard trimmed. So the Fed understands that the economy is in deep shit. If the Fed didn't understand that the economy was in deep shit last week, they would not have made that announcement. So they understand that. And they're hoping to just weather the storm and everything comes back to normal. Okay. No, I didn't see United Airlines getting kicked off of Nasdaq, but I'm not sure why United Airlines was in the Nasdaq to begin with. I don't recall United Airlines being a technology stock. So I'm not sure why it was there to begin with. Yeah, the Speakeasy Hair Salon, exactly. So if anyone understands that the market is, you know, looks like shit, it's the Fed. If the Fed thought that the economy was actually would recover well, they would not have made that announcement. Okay, I want to just take a look at the dollar real quick. Do we know which corporate bonds the Fed would buy? I have no idea. So, as you guys know, I've been a dollar bull for the last decade or 5 years since you guys have known me, some of you, 6 years now, actually. And this is the weekly chart of the US dollar. And I hate to see this double bottom, but it doesn't matter. I remain a dollar bull for the long term. I've been a dollar bull for a really long time. This is the weekly chart of the dollar. And I believe the dollar will rise and all the other shit fiat will fall against the US dollar. Okay, so it makes the rich people with stocks more rich and the middle class and lower class get screwed. That is not true. It doesn't matter if you're rich or poor. You have the same access to the stock market. This is the bullshit that you hear from socialists who are very invested in the stock market. And they're just trying to create class warfare. Even if you have a $10,000 a year job, you can move a fraction of that money. In fact, if you have a $10,000 a year job, you can put all of that money. You can live at home. If you have a $10,000 a year job, you can live with your mom and in the basement, have them cook your food. Look, if you have a $10,000 a year job, you have other, there are some people that come from unfortunate circumstances, but if you are in the United States we're talking about the United States stock market, okay? You are in the United States. If you are an adult, you should have a job that pays you more than $10,000. Otherwise, I don't know what you're doing with your life, okay? Now, even if you have a $10,000 job, you have the same access to the stock market as Warren Buffett. You do, okay? You are no different than Warren Buffett in your access to the stock market. He may have more information than you. He may choose stocks differently, but clearly he went into American Airlines, got his ass handed to him, got out. I got in the day he got out, and I made money on that trade, okay? So just because Warren Buffett has more information than you, it doesn't mean that he's going to make better decisions all the time. He'll make better decisions than me 99% of the time, but there is that 1% of the time where I'm waiting for the announcement that Warren Buffett, hates something and got out, and it crashed, and I'm loving. I'd love to buy that. The first thing I did that morning was buy American Airlines, because I knew that every stupid trader watching CNBC and Bloomberg would also sell American Airlines the moment Buffett announced he got out, which, by the way, he had already got out by the time he told you he got out. So when you sold it, it became unreasonably oversold, so I got in, okay? Anyway, you can open a retirement account. Every one of you can open a retirement account, and you can invest that money in stocks for the long term. So the statement that the rich only get richer because of the stock market is pure bullshit. Pure bullshit. Everyone has the same access to the stock market. You and Warren Buffett have the same access. Need to be 18, need to have a bank account. If you don't have those, if you're not 18, well, maybe on Robinhood you don't need to be 18 from what I'm hearing. But if you are 18 and you have a bank account, you may not even need a bank account, actually. Should be able to just get in. So you can get in. I don't recommend doing any speculative trading. I don't recommend trading options. But you can certainly put your money in the S&P 500 for the next 20 years. Same thing as the rich. They don't have any additional access than you. All right, guys. It's been fun. Please, by the way, one of the best videos about retirement accounts, go to Lucid Investment YouTube channel. We made this video public for Christmas. And I really want to redo this video one day, like with parts of Tyler Jenks. But this is a really important video. Really important video. That's why it used to be up for sale and we released it for free. So if we go to Lucid, eventually my page will load. Huh. Lucid Dreams. Oh, come on. Come on. All right, here we go. If we go to Lucid Investments, right there, the last video published, because 5 months ago, it was Christmas. Understanding Retirement Accounts by Tyler Jenks. Okay, so watch it. I can't believe it only has 7,000 views. It's really, really important for you to understand the meaning of retirement accounts and investing for the long term. All right. So on this note, we're going to go ahead and call it a day. Please support with the affiliate page. And also this weekend, I will put my Intro to Trading webinar on sale. It will be, if you go to the on-demand videos, this will be a slightly longer version of this Intro to Trading technical analysis. It will talk about candlesticks and trend lines and moving averages, and we're just going to go in depth. It will not have any sequential stuff. We will not have any indicator stuff. It's just for the beginners learning technical analysis. I'm going to be putting together a whole new set of slides. I want to redo it. It's been a while. And then a few weeks later, I will combine risk position and leverage management with entries, exits, and stop losses. And these will be my two main, they'll probably be the only two up for sale, along with mastering options trading, which I will be redoing probably in January. So the next options course will be January. All right, guys. Thank you all so much for watching, and I will see you all on the next one. Good luck trading.